Good morning, guys, and welcome to today's edition of the London Session Open. Today is January 27th, 2020, and it is 9:43 a.m. in London when I'm doing this market update. We're going to take a look at the markets. There's quite a lot of activity because of the coronavirus spread, how that has quickly infected so many more people, primarily in China. But as you probably saw on Friday, when the second case of a confirmed corona patient was confirmed in the US, then that caused the US stock markets to decline as well. So we have quite a lot to cover, and we're going to begin with the euro versus the USD, and then we're going to go through the stock market indices and gold and so on and so on. Okay, let's begin. And as well, just before I forget, on the homepage, so if you're new to Investing Cube or the ATFX YouTube webinar, it's something we do Monday to Friday around 9:30, 9:40 a.m. London time. Usually if you tune in at 9:30, you'll see that there's going to be a little thing there showing that we're about to go live. As well, I'm available via Twitter on AlexFX00. So let's begin, and yes, of course, there's a ton of articles here on the homepage on Investing Cube. You got the latest sections, you got Forex, you got the indices and commodities, you also have the cryptocurrencies and the shares, and here they are in chronological order, the different updates. So what we try to do here every morning before 9:30 a.m. London time, effectively try to update all of the major markets so you have a good idea of what's happening as well. If you're looking for trade ideas, it's really good to check out our charts and so on in the articles as we publish. We try to add a chart pretty much to everything we do to make it more actionable for you. All right, so this is the euro versus the USD, and we talked about this one already last week. Last week we said that we were dealing with the head and shoulders with a head left and a right shoulder, and that a break to the downside here would probably trigger, the break to this level here at the 110.62 would trigger that pattern. The actual head and shoulders pattern neckline is up here, but I do like to combine horizontal support and resistance to maximize the likelihood of success. So that's why I waited for that break here to this January 20th or December 20th low. Sorry. The market now is well into in the money, this position. The market can still decline further. The head and shoulders pattern, the difference between the head and the neckline is 168 pips. If you add to subtract that from the breakup point, you get a target of 109.22. And with that in mind, I think we just, if you're still trading on this one, which makes sense, I will just keep it. I think we're about to reach support at 110, and then maybe from 110, maybe booking half of the position. And then if we do swing up to 110.60, then I do think people are going to sell here again. And as long as you trade below something like 111.13, the market is going to be bearish. GBP versus the USD. So last week and before that, we said look to buy here at 113. The market went as high as 131.60. So that's a 160 pip profit over a period of from the 13th of January, and then we reached this high on the 22nd. It's almost 10 days. Now we have the meeting coming up. The Bank of England rate meeting. It's really 50-50 if they're going to cut. I do think they're going to cut, if not here, the next time. We talked about it last week as well. I think the next time is actually going to be a bit late. Let me see if I can pull that out. I think it's going to be a bit too late for them. So the next meeting is going to be in March. So that's 1 month and 26 days. By then, we would already have Brexit. So to this time around, I mean, the likelihood of easing is at 59. So I still think they might go for it. I think maybe there's like an 80% likelihood of them cutting. 75, make it 75% of them cutting. Because otherwise, if you have Brexit in February, 1st of February, you see a little bit of panic in the market maybe. Then are they really going to wait 1 month and 26 days to cut again? They will need to be cut like the week after Brexit or the same week as Brexit, maybe, and that could potentially be seen as a sign of panic. So it's a bit tricky here, but well, as I said before, the best idea would have been to get out of the market before the event, and I'm sticking by that. So obviously, with the help, I mean, it's very easy to trade in hindsight. So last week we were trading pretty much here, and I said probably a good idea to book half of the position, and then maybe book the rest at 32.50. Obviously, we should have probably booked everything here last week. So what can we do now? Well, if it does swing up here, I think we can get out here if we want to. And if we want to get involved again, this was the original entry. If we take fib from the low to the high, you can see this is the third fib almost, the 61.8% correction level. I have a suspicion really that it's probably slightly better not to buy here right now. But if you really want to, then you might be able to get involved here somewhere around the 39 level. I'm gonna stick with the idea of buying here at 130. That's what I'm gonna do. Dollar yen, because the dollar yen, had this gap here. So the market closed here at 109.24 on Friday, and then the market opened up here. So it was a gap of 36 pip, which was extended to be 54 pip difference from the Friday close to the low here on Sunday. The market then pretty much went upwards, and this is very typical. You see the lowest from Friday was the highest of today. So we didn't fully close, but this is almost fully closed. But the market is just looking to close this gap here. Okay, which it pretty much did. Sometimes it will try to close everything, but this is sort of the minimum. And if we look at this today, and we're going to talk about that in a few minutes. I have this little map here. I don't know if you've seen this one. This is data from, let me see if I can adjust this so you can see better. This is actually data from the World Health Organization, the US CDC, and we got the NHC, and then we have this institute here, and tells you a little bit of what's going on here, and you can see how rapidly the number of confirmed cases have risen. So it's definitely a bit scary. Then that's really the main reason here. So let's actually talk about it now, actually. So let's just pull out some calculators. And I know we will need to see further, but let's do some calculations together. Okay, so this is confirmed cases. So when they first started to update this was on January 20th. Then we had 278 cases. Here for the last reading for the 26th, which is yesterday, you got 2,700. Okay, so you got 2,700 confirmed. And the initial value was 278. That's a growth of 9.71% in a period of 6 days. Okay, so 1/6, that's 0.16. So we raise this to like that. That's a growth rate of, let me double check if I checked it. Yeah, 26 actually. That's a growth rate of 45%. So every day, the number of totally confirmed cases increased by 45%. I think 1.45. So let's see, where are we gonna be in 1 week from now then? So we raised that to 7. It's gonna increase by a factor of 13.47 and multiply that by the total today. So we'll have maybe 36,386 confirmed cases if the pace continues. So if we see the same growth rate of 45% per day, then that's what we're gonna be in 1 week. Now, because this is grows exponentially, where are we gonna be in 31 days, so 1 month? Now this is when it gets scary. Apparently, yeah, this is, hopefully we'll sort it out by then, but apparently, well, not apparently, it's just a simple mathematics. There will be about 321 million people affected by this in 31 days. So obviously it's a bit understandable that the market is getting a little bit scared. But that's really what's happening today. Let's see what happens by next week. Hopefully the growth pace will moderate. So if we just look at the change, from 26 to here, so that's 700 over 2000 more or less. Growth is, well, actually, yeah, the growth rate is at 35 just from one day to another, so still quite high. And hopefully this will plateau, and I reckon until this starts to moderate, maybe the market will continue to be more scared. We did an article about the SARS virus as well. The World Health Organization pushed through like a global alert, and then I think a few weeks later there was a big meeting between the big Asian countries, and then from around that point the market started to bounce, and then by the time it was pretty much declared that the risk of this spreading had diminished, at that point the market had already moved up quite a bit. So I think that's what we're looking for. We're looking for the World Health Organization to probably come out and sort of issue like a warning, like the big warning, like everybody stay alert, which I haven't done yet, and then maybe some sort of meeting or something that where you see some strong action, scan everybody that comes, the flies and so on, and then I think at that point maybe we'll see around that point between World Health Organization and maybe some more measurements from governments. Well, I think maybe at that point we'll see things market probably bottom out. And what do we talk about this? Well, our own healthy, healthy and safe, but then of course the markets, right? So right now you have the dollar yen going down, and from a purely technical perspective, the trend remains bullish for now, right? So it does remain bullish, and as long as you're about 107.62, the market may go upwards. But for now on the dollar yen, if anything, I will remain bearish. I mean, that makes perfect sense. You got this high at 109.66, and we moved up a bit. If you put fib on this, by the way, this is not the best scenario. I'm going to show you what's the best to sell in a few minutes. It's not the best because you're shorting against an uptrend. But I reckon that if we do revisit maybe today's high or something like that, then some people might look to sell, and then they might try to target the support level. And I'm actually going to remove this little arrow here for now. And then I think probably down to 108.50 or something like that. And the trend will, at least in the short term, definitely remain bearish below 109.66. Okay, so what's actually a better option, something better to keep an eye on instead of just shorting the dollar yen? Well, a few weeks ago, a few days ago, we did talk about the Aussie dollar versus the USD, right? So we talked about a big head and shoulders with the head, left, right shoulder. We talked about the break here for this going down. You can see that this is in profit right now with about a 76 pip. So that's looking good. And today you have a new one breaking lower, which is the New Zealand dollar. So you got yourself a head, left, and a right shoulder, and then you got the break here. So the optimal entry would have been 65.77, but I think from here already, maybe let it go up a bit. I don't know if it's possible. If it does go up a bit, I think on this sort of spot we can go down. Difference between head and neckline is 188 pips, and you're having that little break right now. So I think this makes a lot of sense as well. What's also interesting is that this pair, the Aussie dollar and the Euro USD, they're all doing the same thing. And when you see things like that, when you see that sort of decline across these markets at the same time like that, that's usually a good time to actually just being bearish really. If we take a look now at the next market, it's going to be gold. So we talked about gold here as well, and gold we talked about buying down here, and that is going really good, as you can see. The market is up now by a nice cool, let me see here. There was the buy here, stop was supposed to be here, so you should be up with almost a 1.8 times risk reward ratio. I think this can go upwards higher. You also have this small inverse head and shoulders at the second one that was triggered here, and this has a target difference here is about $28, and that gives you that target here. But I do think because of the current situation across the world, sort of people are a bit scared, and this can probably trade a bit higher. So let it go up. We can book probably 50 if not 100% of everything up here. If you think this whole thing, the coronavirus is going to die down, then obviously you would look to get out now, but it doesn't look like it. The alternative funding level is going to be down here, and that is the 1545. So actually make it 1546 level. And if we look at this here, you got the breakup point. So around this spot here would probably be the best entry now. You're looking for that pullback if we get it. And then looking like that, okay. What else? Crude oil prices. So crude oil prices, crude oil markets are just getting hammered. There's not too much we can do about it right now. It's just people are just selling off here in this market. It was going down even before that. So remember we said the trend was short-term bearish here, and we wanted to track these lower highs, wanted to see what's going to happen here. Well, we haven't properly bottomed out yet here, so I wouldn't get involved. The trend in fact remains bearish below 56.11. We're now on the other side of the range soon here, so we got this big range between 50.45 and 63.63, and we're now at the other extreme here. We might go a little bit lower, might try to break out, but I don't think we're gonna break below 50 yet. Looking at this today, I'm very hesitant to sell, but it's bearish, and I guess if we go up a bit, and I don't think this is necessarily going to be hit now, but if we do go up a bit, maybe to 54.32, then we're going to probably see it go lower again. So probably this will happen most of the time. It's like here, right? Market goes down, 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 down a lot, and then it goes up, and then it attacks again. Actually, this is better. Down, up, and then down, and then something goes up and down. So these reversals, they take time. It's a bit like, not the same, but going down, up, down, and up. So that's what I'm looking for here. Probably up and then down. In fact, I think I need to, I'm going to adjust this. I'm going to push it down 50% correction from this slide here to here. This will be the 50. So 50 should be sufficient. And then like that. Okay, German DAX. Unfortunately, the German DAX setup I was talking about so much about, that one did not work out. Just because we had the situation with the coronavirus. And it really came quite sudden. It was really off the radar until recently. In fact, I was in Hong Kong myself until Tuesday last week, and we were there, and we were a lot of us, 450 of us, from different parts of the world, and no one really thought or cared or said anything about any of this. And then I flew back on the 20th. Yeah, the 20th. When I landed on the 21st, that's when it was started to be more talks about it. And if you look at this little map here, they're not even counting. They were probably counting stuff, but on the 20th is the first data point here. So very quiet, but now suddenly everybody obviously is very much into this. And at the time, it looked like a genuine breakout, and the idea was to buy here or to buy on the breakout. And unfortunately, this failed now. This is now going lower, and it's not the only stock market is going down. And I want to take a very defensive position, and a very defensive position means that if we do look to buy, we look to buy at lower levels. and maybe down here at 13,000 with stops below 28,872. I think in the short term this will go up a bit, and then we'll go down and then go up and then go a little bit lower. But the better options, the better stuff to watch is something like New Zealand dollar versus the USD, because if you have this, makes more sense, it's gonna go down. As for the stock markets, this is the S&P. So you might remember we said look to buy here, and the market went all the way up to the prior high, which would have been a good opportunity to book half of the profits, if not everything, and then tighten things up here. Now when the market slid below this low here around these levels, the short-term trend turned bearish, and that's what we're dealing with now. We're dealing with the short-term bearish trend, and we're closing in on the highs here from December 27th. Actually, that's where we are right now. You have this little spot down here. Now let me see if I can load something different. I have a different set of charts. Okay, let me see here. Okay, so I don't have it for the S&P, so we're gonna do it for the Dow. Okay, so I personally think and hope that we'll get everything sorted in regards to the new coronavirus, which should be fine. But we can, again, if things go crazy, we should not underestimate the likelihood of a bit of panic, right? As well, I mean, everybody sort of remotely involved in the markets knew that, the current situation, with the markets, the way they're actually gaining over the last few months and weeks is just way too fast, right? So if we pull this channel here, let me just do something here. We put that channel here, and this is a channel that worked really good to predict this low in October here. So putting that channel, you can see we're moving back into the channel, and there's different ways of using this, but one would be looking to buy very close to 20,372 with maybe stops below this little spot here, which is the spike here in the beginning of January. So effectively we will look to buy here with stops there. The only issue though is what I think that this scare can probably continue for a bit longer. I'm still looking for that World Health Organization sort of message that this world crisis and people really scramble to get their stuff in order. So what I would prefer, I'm not sure if it's going to happen, but I would prefer to potentially buy at low levels here. Alternatively, what we can do, there's nothing wrong with that, if it goes down a lot and maybe even spikes lower, but does not trade below the January 8th low or for that week or that day, it might potentially be possible to pull a little long one here, tight stop loss. If we risk 1%, say we risk 1%, and then the market just goes back up again after a few months, then you're looking at a crazy 7.41 times risk reward ratio. If we just go up here, is 5 times risk reward ratio. If it is though that people get a bit more panicky, which I think they might do, then we might be down here at the median line, and then from the median line you have this low here, which is the December 3rd low, and that level is at 27,294, and I think that would be probably my optimal entry. From the high to the low, that will be a decline of 5%, which is not even a lot, 5.7 actually. It's not too much, but that will be something interesting. And then I think as the dust settles, at least if you look at it from a chart perspective, you got a big left shoulder, a big right shoulder, and a big head here, and you got the break to the upside here, and you still have that inverse head and shoulders target, and that target is of 32,142. It might take a year or so, but the trend is clearly there. The question is where we're going to buy it. We're going to buy it here at 20,368, or maybe buy it slightly lower levels at 27,732. At that point as well, I think the RSI is going to be quite oversold. Finally, CNN Fear and Greed Index. This one is quite good. So this one is very good in letting us know when it's time to buy. And the fear and greed index is still unfortunately quite high, and it can still go down quite a bit before it actually tells us it's time to buy. Okay guys, let's see if you guys have any questions. So we got Maurizio. Good morning to you, sir. Hope you're doing well, and thanks everybody that is watching. We have True Invention as well here. He says, hey Alex, can we take a look at the Aussie dollar? So we took a look at the Aussie dollar, yeah, does remain in a downtrend. So we had a head and shoulders here that we talked about, the break here, and I would just hold on to this one. If you have a bit of patience, I think we can see it 67, if not 66, 64, because of the pattern here. So I definitely think it's going to go down a bit more. The thing is this though, if you didn't short already last week, it's way too late, because we could have shorted here on the original breakout, and then you had the Aussie employment figures that lift things higher, but did not take out the stop. So you think you need to wait. Maybe we'll go up to, I'm not sure we're going to go all the way up to 68.25, but if it does, then that's sort of the spot you want to look at. You might, if you really want to get involved, take fib like that. Yeah, this is almost a 50. Maybe the first fib at 38.2 might be enough, but my preference is here. Let's get a question about Euro Norwegian kroner. So this is Euro Norwegian kroner, and we'll load the daily chart. Okay, so this market is moving upwards. The Norwegian kroner in times of crisis, much like the Swedish kroner, tends to get hammered. It's just the way it works. And it is driven by a big channel to the upside. I think I have this one here. Yeah, so this is my Euro Norwegian kroner channel, and you can see how the market bottomed out. It's not a perfect channel necessarily, but it does guide us a bit. And effectively, we're coming up to the first level here, where it's a take profit level at around 10.09 at 10.03. It's take profit, and it might act as resistance like here or here, where the market went down. But we don't want to be trading against the trend. So this is just a take profit spot. And I think if things do turn a bit more worse with the coronavirus, which I think it will do, we can probably go up to 10.19. That makes sense. But the problem here is that unless you bought already, you're a bit too late here, unfortunately. So I would prefer looking at other stuff where makes more sense. You can as well, you know, when I say it's too late to trade on the daily chart, because the move already happened, right? But again, as I said, we can probably go upwards. And if you want to, you can always skip. This is a 4-hour chart, and then on the 4-hour chart, you can see it's a bit different here. You're still dealing with an uptrend on the 4-hour. You're still dealing with something like that. And if you take fib from this low to this high, you get the first fib here, but probably the 50 fib, maybe around here. So that will be 9.98. Maybe from this level, target these highs again. Okay, I think we're gonna wrap things up. All right, guys, I want to thank so much for watching, and I'll see you guys tomorrow. Don't forget to subscribe to the YouTube channel. Don't forget to like the video. You click up here, you land here, and you just click on the like button here. And as well, if you're not already subscribing, it's very straightforward. Because I'm watching my own channel, or the channel I have access to, I can't subscribe to my own channel. But if we go to this BBC News, or any other channel for that matter, you will usually find a subscription button like this one here. So you can click on subscribe, and you can click on that little bell button as well. As well, you can follow me on AlexFX00. As well, I'm available on WhatsApp as well. So what I do is that I do send out this video most of the days of the week. So if you can't join me, you just send me a message here and I'll add you to the list, and I'll send you at least maybe 3 messages a week. Sometimes as well, if there's some interesting articles, I do send that to you guys as well. Okay, we're gonna wrap things up. Guys, have a great day and stay safe out there, and I'll see you guys tomorrow, same time, for the next market update. Thank you and bye bye.